Hi, it's Rick here with your daily market recap for Thursday, September the 15th. Again, this will likely be a fairly short video because not a whole lot happened today. Certainly no change in our risk model. Everything's still down. And in fact, if I could color code this a different way, it probably got a little bit more risky. Toronto was down 0.7%. QQQ is down 1.7%, spiders a little over 1%, and the small caps and mid caps just over half a point down. In the sectors, oil took a beating, down 8%, uranium down 4%, solar is down almost 4%. And on the upside, not a whole lot of anything. Let's see, what do we got here? No, really just couple of small gains in mainly in retail and financials. So not pretty. Let's have a look at the charts. Starting with the small caps. No real change. It didn't go below yesterday's low, which is interesting, but we did close right at the day's low. So that doesn't bode well for tomorrow. Mid caps, same story exactly. Didn't take out yesterday's low, but closed right near the low of the day. The Qs did take out yesterday's low, and they seem to be remember, I drew two paths here, one bullish case going back up and the other bearish case heading back down, and it looks like we're on path 2. And the spiders took out yesterday's low and closed near the low of the day and is in danger of taking out the low from September the 6th. And if that goes, it's headed down here somewhere. So not good. One of the things that after this video, I'm going to prepare a longer video. I think now is all bear markets end, and eventually we're going to get into a bull market. And out of what Mark Minervini now refers to as a hard penny environment, and we'll get into an easy dollar environment. And so most of us are sitting in a pile of cash and just waiting for those days to happen. And we need to prepare ourselves for it. So I'm going to prepare a video that basically, it's called diversification, but basically it's determining what kind of an investor you want to be or are based on your personality, and how you set your plan up for capitalizing on a market advance that's eventually going to come. If I just stretch out, we've been in a bear market since November of last year. If you look, using the spiders as an example, they peaked here in January the 3rd, was it? Yeah, first week of January. The Qs, I think, was actually peaked in November. Yeah, back in here in November. So we've been at this now for about 10 months. This is sort of a rough environment. But I would argue, a lot of us argue that if you look at this chart, this is a fund managed by the infamous Cathie Woods called the ARK Innovation Fund. And she was the darling of investors, especially the Robinhood, when Robinhood launched their app, and the meme stocks and high growth stocks. She was just pounding it, just doing really well, and created an enormous following for her funds. And then it peaked actually in February of 2021. And if you look, and then since then it's been straight downhill. I think this is like she's down now 72%. How would you like to own that fund? And she's been buying all the way down, buy the dips, buy the big down days, and so on and so forth. She's making her problems worse and worse and worse. Anyway, so bottom line is, I would argue that we've been in a bear market since February of last year, because the only reason that the Qs and the spider were held up, they held up from February, this period here, is because of Apple, Google, Microsoft, or the energy stocks and financial stocks. So sort of very few, a couple of sectors and a few names that make up a big component of the S&P and the Qs were actually still going up. And so this was masking some really bad deterioration in the main stock market in that period of time. Anyway, that's a long way of saying, don't worry, the end will come. You know, we could end up down here. It could take 3 months. It could take 6 months. God, it could even take a year. But at some point, we have to prepare ourselves for it, and that's what I'm going to spend some time preparing videos and how you can prepare yourself to take advantage of when those good times come back. So that's a little spiel there. I'll just quickly review what happened with my portfolio today. Not a whole lot. ARLP still holding up. I'm really managing this off the weekly chart. So the key point for me is around 23 and change, which is a couple of bucks away from here. Enphase had an interesting day. I made an absolute rookie mistake this morning. I'll show you this on a 15-minute chart. So I had entries down here, another one down here. Didn't do anything yesterday. And this morning, before the market opened, I thought, well, I'm going to protect my profit. I mean, I risked maybe $600 or $700 between these three trades, and I'm up about $4 grand. And I said, I want to protect that. I'm just a bit chicken. So I put a stop loss with one of my broker accounts at down here. I was at 308. Something like that. So I was going to lose maybe half of my profit, but at least I kept the other half. So I put the stop loss in down here. Well, not 2 minutes, not even a minute into the open, I got a beep on my phone, an alert that I had a trade. And instead of putting a stop order in, I put a limit order in. So at minute the market opened at 6:30 and 1 second. Guess where I got filled, right? The opening price of 316. So I'm thinking, oh, crap, because it immediately ripped back up and got as high as 322. I didn't buy it back. And then eventually it came down and down and down and down. I said, oh, maybe that was a good thing. Anyway, long story short, I got stopped out of my other half of the position here at 308 and change. But when I saw it didn't break this 5-day moving average, late in the day, I actually bought half of my position back. I think I paid 310, no, 309.60. That's what I paid. So I'm back into this thing with a half position. Anyway, rookie mistake. Live and learn. GLP. Oops, let's go back. You can see with these spots here, this thing trades by appointment. It trades very little. Has done nothing wrong. It came within another nickel or so of my stop, but the stop held. So again, I'm fully expecting tomorrow I'll get taken out. My stop would just break even. Harmonics, I did get stopped out. Again, I had a chicken stop based on this 5-day moving average. I had my stop below yesterday's low of the day over here, and I got taken out. So that ended up being a really good trade. And I'll probably get back in this. And the same thing with EVH. EVH is doing nothing wrong, but again, I lose patience. And when these things run out of steam, I'm a momentum trader. And when these things lose steam and the 5-day moving average starts rolling over and it trades below that, I'm starting, especially in this environment where it's so choppy, I take my profits and run. So I got out of this. And again, chart pattern looks really good. I'll be looking to get back into it. And then I did add one new position today. Northrop Grumman. This has been on my list for some time. It's got a weekly that's just wedging a little bit higher. Really got a nice long base here. Really good fundamentals, nicely tracking above the 40-week moving average. With the big market weakness 2 days ago, it came down, but then retraced that and it still had a strong day today. So again, if I just flip back to the 15-minute chart, this 5-day moving average is flattened out a bit, come down a little bit down. Now it's traded above it. So I was able to enter this at 484 and change up here, right around here. And I have a stop down at 480, so I'm only risking like 1%. So, and then I can potentially add to this position if it works in our favor. So that's it. Keep your eyes peeled for another email later tonight. Hopefully I can get this other video done. I'll try to keep it under 20 minutes. And we'll talk to you later.